Hey, welcome back to YT Finance, and today we are talking about Workhorse Stock, Lordstown Motors stock, and NIO stock. Specifically, we will talk about Workhorse's upcoming earnings call and how that will impact Workhorse Group stock price. We will then talk about Lordstown Motors becoming public and their stock price falling, and lastly, we will talk about NIO and how NIO could gain a huge piece of market share in the upcoming months. If you like Workhorse, Lordstown Motors, or NIO, like this video right now, subscribe if you are new. If you are already subscribed, thank you so much, and comment down below your thoughts. And without further ado, let's jump into our first article. If you don't already know, Workhorse makes and develops drone technology and electric vehicles for the last mile delivery sector. Workhorse Group will be having an earnings call on Monday, November 9th, at 10 a.m. Eastern Time, which is 7 a.m. Pacific Time. This call will be with Workhorse's management, and it will conclude with a question and answer session pertaining to Workhorse's Q3 financial results. You can use the information provided on the bottom left of the previous slide to dial into that earnings call, or if you missed it, you can enter the information on this screen to hear a replay of the earnings call. If you plan to join this call, please dial in 10 minutes before the earnings call starts, and if you have any difficulty connecting, please dial the number underlined in red. This replay will be available until Monday, November 16th, which would be exactly a week later. Now, on average, earnings calls causes stocks to spike or dip, and because Workhorse is extremely volatile, if Workhorse Group does not meet earnings predictions, you can expect that the stock will drop in value. But if they surprise investors, it could be a very nice payday. Most likely, the earnings per share will be negative, but depending on how negative, it might not break the price. I personally suspect a dip in the share price after the call, and we will get into why I think that later in this video. Regardless of this earnings call outcome, it will only affect the short run price. Workhorse still needs the funding from the USPS contract to start making good profits, which Workhorse so far has made none. Workhorse is on the right track because so far, Workhorse vans have traveled 8.5 million miles, and with the price of $300 per kilowatt hour, their battery-powered vans cost them $30,000 to make. So if Workhorse can make their vehicles for cheaper by getting the USPS contract so economies of scale takes place, Workhorse will be sitting pretty with loads of cash to reinvest back into their business. Right now, the safest bet might be to hold Workhorse stock because 9 rating firms have recommended to hold the stock, while 5 research analysts also say to hold Workhorse stock for now. The average price target for Workhorse for these analysts was $17.17, which is much lower than the price prediction last time, which was $23. Some firms have even lowered their price predictions for Workhorse stock to $11. Some think WKHS is worth $23, while others say Workhorse Group is a $27 stock. This just goes to show you that no one really knows, and these are all educated guesses that depend on a variety of variables. We also have to remember that in the third quarter, multiple institutional investors dumped thousands of dollars into Workhorse stock with investments of $25,000, then $30,000. Then a firm who had over 19,000 shares bought 14,000 more, followed by another company who spent $35,000. And in the second quarter, we saw investments over $40,000. So even though the overall investments have slowed a little for Workhorse stock, it's still being bought up at a very good rate. Last time Workhorse Group announced earnings, the stock actually did not even move, though it missed analysts' estimates for earnings per share and revenue, so Workhorse stock might be more resilient than I think it is, but with analysts predicting that Workhorse will have 0.07 EPS, we will find out. To summarize these articles, Workhorse is trending down, which is causing more and more analysts and firms to say hold Workhorse, while other firms still say Workhorse is a buy. The current price prediction for Workhorse stock is $17.17, which was a drop from $23, and we shall see how Workhorse's stock price will pre-act and react before and after their earnings call, which is on Monday, November 9th. If you don't already know, Lordstown Motors just completed its merger with Diamond Peak Holdings, so now Lordstown Motors has the financial backing it needs to deliver its electric pickup truck next year. Lordstown Motors plans to roll out their trucks close to the times that Tesla, Rivian, and General Motors plan to deploy their trucks, yet Steve Burns stands out from his competitors because he is targeting commercial fleet customers with a $52,000 electric pickup truck. Steve Burns, the CEO of Lordstown Motors, says this, and I quote, "We don't see anybody in our lane. There is nobody with a full-sized truck for workers priced in this range, and it is hard to get a lane to yourself in modern-day automotive. Nobody's playing in this lane right now, and we plan to claim it, own it, and lead it." Lordstown Motors has very good market positioning right now with little to no direct competition, and with Workhorse owning 10% equity in Lordstown Motors, this could be set up for great future gains, but at this time, Lordstown Motors is a much less risky stock than Workhorse Group. At this time, Lordstown Motors stock price is correcting because the hype from the DPHC merger is dying down, so don't be alarmed if you are down right now. But the merger with DPHC provided Lordstown Motors with plenty of proceeds, plus another $75 million coming from General Motors, among other investors like Fidelity Management and Research Company. Steve Burns says this for the merger: "It gives us the financial acumen to be able to get this done. Since we're in a race to be first, it was really important for us to get that funding so we could be assured of production by September." The trading ticker symbol for Lordstown Motors is officially RIDE, RIDE, which changed from DPHC, and Lordstown Motors warrants will be ticker symbol RIDEW. Their new endurance truck can go 250 miles per charge, which equates to 75 miles per gallon, but GM's Hummer is said to go 350 miles per charge, and the Rivian R1T claims a 400 mile per charge trip, which could provide indirect competition in the future for Lordstown Motors. Now, these indirect competitors are very expensive and much more expensive than the endurance truck, but it is still indirect competition nonetheless. The endurance truck needs to come out with better models and better technology. Now, a unique thing about the endurance truck is that it has an onboard power export, so power tools can be hooked up to it without the use of an outlet or a portable generator. Steve Burns was surprised about already having 40,000 non-binding pre-orders, so he hired 200 employees, some of which came from Tesla and EV maker Karma. Lordstown Motors' head of propulsion systems worked for Tesla for 7 years, and the vice president of engineering has worked for GM and Karma Automotive. Lordstown Motors has top-tier management and employees that have experience in electric vehicle manufacturing and the automotive industry as a whole. If you want to know if a company will succeed, just look at their management. And for our last story of the day, we have NIO, ticker symbol NIO, who is becoming very popular in the US even though they have not delivered cars here yet. Despite constant losses and the lack of profit, NIO, having many retail investors, institutional investors, and even the Chinese government backing its business model, is doing very well despite the lack of the financials and fundamentals of the company. Normally, if a company makes profits, that is rewarded by investors putting money into it, but with NIO and many other companies nowadays, we use the company's future potential and invest with the long run in mind, just so we can get better payback within the future. Tesla is a great example of this because they just turned a profit this year, but they have paid back tenfold. Tesla is currently in the lead in the EV sector, but NIO wants to stop that, which is a very ambitious goal to say the least, especially since Tesla has entered China. In the past 52 weeks, NIO has spiked from $1.36 all the way up to $29.40, which is absolutely amazing. With internal combustion engines slowly being cycled out in states like California and New York, electric vehicles become more and more enticing, especially as their price point drops as competition rises. But over in China, they are planning for EVs to be mainstream, and NIO wants to take over and dominate that market. NIO is using a special approach to retain customers, and it's with their batteries. NIO has a battery as a service program where NIO employees will remove depleted batteries and replace them with a fully charged one to reinforce customer loyalty while making a reoccurring revenue stream. The problem is that this could easily backfire because it's inconvenient for most people who have busy schedules, when you could get a Tesla where their new batteries could potentially last the entire lifespan of the vehicle. But what do you all think? Comment down below your thoughts on these batteries. The conclusion is that NIO is a great long-term stock play, and they just might take over the premium electric vehicle market in China China as they make plans to enter additional markets overseas. Thank you so much for watching. Don't forget to leave a like, comment, and subscribe, and I will see you in the next YT video.
Money.